If you're looking to buy real estate in San Francisco and can't afford a single family home, that leaves you with three options: condos, TICs, and co ops. And if you're like most buyers, you're wondering what is the difference and which one is right for me. So, if you're new here, my name's Lisa Vukovic, a San Francisco real estate agent, and I make videos all about San Francisco real estate and everything you need to know about living here. So, today, I'm going to be breaking down everything you need to know about condos, tenants in common, and co ops in San Francisco. We'll cover the key differences, rental restrictions, and why TICs and co ops typically sell for less than condos, and the pros and cons of each property type. Stick around until the end because I've also created a downloadable comparison chart that you can use to reference when you're house hunting in San Francisco. Let's dive in. Let's start with the most straightforward option, the condominium or a condo. A condo in San Francisco is an individually owned unit within a larger building or development. When you buy a condo, you own your specific unit outright. You share ownership with common area interests like hallways, elevators, lobbies, and outdoor spaces with other condo owners. Each condo unit has its own separate deed and title. You get traditional financing with a conventional mortgage, FHA loan, or VA loan, depending on the price. It's just like buying a single family home. Most lenders are comfortable financing condos in San Francisco. And condos have HOA fees or homeowners association fees that cover the building maintenance, insurance, amenities, and common area upkeep. You'll also have the most flexibility when it comes to selling or renting your San Francisco condo, because condos are the most traditional form of ownership. They're easier to finance and typically command the highest price in San Francisco real estate. Banks love condos because they're straightforward, and buyers love them because they offer the maximum flexibility. Now let's talk about TICs, which stands for Tenants in Common. This is where a lot of San Francisco homebuyers get confused. First, let me clear something up right away. This term tenants in common does not mean you rent to tenants. It does not mean you are sharing your living space with other people. This is the biggest misconception about TIC ownership in San Francisco. The word tenant here is a legal term from property law. It simply means holder or owner. You are the tenant of your own property in a legal sense, not a renter. So a TIC is a form of shared ownership where two or more people own the entire building together, but each owner has an exclusive right to occupy a specific unit. Think of it like owning a slice of pie, but you get to eat your specific slice and nobody else can touch it. In a San Francisco TIC, you and the other TIC owners share one deed for the entire property. However, you have a TIC agreement that legally defines which unit you occupy and what percentage ownership you have, and how the expenses are divided. Let's say you buy a unit in a 3-unit building. You might own 40% of the building, another owner owns 35%, and the third owner owns 25%. These percentages are usually based on the size and value of each unit. You have legally binding TIC agreement that has an exclusive use of Unit 1. Someone else has exclusive unit of Unit 2. And so you're not sharing a kitchen or a bathroom with anyone. You have your own private space, just like a condo. Here's where TICs get tricky because all owners share one deed. Most conventional lenders will not offer traditional mortgages. Instead, you typically need a TIC-specific loan or fractional financing. These loans usually require 25 to 30% down, and interest rates are usually about 1% higher than conventional mortgages. Some San Francisco buyers use portfolio lenders or credit unions that specialize in TIC financing. Because financing is more difficult for the buyer, there's a smaller pool in San Francisco, and they typically sell for 10 to 20% lower than condos in the same neighborhood. This makes them attractive options for buyers looking for a more affordable option in San Francisco real estate. But you're trading price for flexibility. Now let's talk about rental restrictions for TICs in San Francisco. One of the biggest differences between condos and TICs are the rental restrictions. Most San Francisco TIC agreements have strict rules about renting out your unit. Many TIC agreements will require unanimous consent from all other owners before you can rent your unit. This means even if one owner says no, you can't rent out your TIC. This is a major consideration if you think you might want to move out and rent your own San Francisco property in the future. Some TIC agreements allow rentals with the majority approval rather than unanimous consent, but this is less common. So, why are TIC rental restrictions so strict? Because all owners are on one deed and they share the financial responsibility for the building, and they want to ensure that all occupants are owner occupants who are invested in maintaining the property. These rental restrictions make San Francisco TICs less flexible than condos, which is another reason they sell for less. When you go to sell your TIC, your buyer pool is limited to people who want to live in the unit themselves and not investors who are buying that might need rental income. Now let's talk about another property type in San Francisco, and that is the co-op or housing cooperative. In a co-op, you don't actually own real estate. Instead, you own shares in a corporation that owns the building, and those shares give you the right to occupy a specific unit, and it's more like owning stock in a company than owning real property. So, when you buy into a San Francisco co-op, you receive a stock certificate and a proprietary lease that gives you the right to live in your unit. The co-op owns the entire building, holds the mortgage, and pays the property tax. As a shareholder, you pay monthly maintenance fees that cover your portion of the property taxes, insurance, and operating expenses. Financing a co-op in San Francisco is very similar to financing a TIC. Most conventional lenders don't offer mortgages for co-ops because you're not buying real estate, you're buying shares. You typically need a share loan, which requires 20 to 30% down and comes with higher interest rates. So, co ops typically have the most restrictive rental policies of all three property types. Many San Francisco co-ops don't allow rentals at all, or they severely limit them. And most co-ops require that you live in the unit for a minimum period before you can rent it out, and most require board approval. The co-op board also has significant control over who can buy into the building. When you want to sell your San Francisco co-op, prospective buyers usually need to be approved by the board. The buyer pool is very limited, but they are ideal for first-time homebuyers wanting to get in the market instead of renting. So let's talk about how selling these different property types compares. Selling a condo is straightforward. You list it, find a buyer, and close the sale. Your buyer can use conventional financing, FHA, VA, or a standard loan product. You have the largest pool of potential buyers, which means quicker sales and the highest price. Selling a TIC is more complex. Your buyer needs to qualify for TIC lending, which means larger down payments and higher interest rates. This immediately eliminates many potential buyers. Additionally, in most cases, the other TIC owners have the first right of refusal, meaning they get the first opportunity to buy your unit before you can sell it to an outside buyer. This can also slow the selling process down. The smaller buyer pool means you'll likely need to price your TIC lower and wait a little bit longer for the right buyer. Selling a co-op is the most restrictive. Your buyer needs to be pre-approved by the co-op board, which can be subjective and time-consuming. They need to qualify for share financing, which is harder to get and requires higher down payment. And the selling process can take significantly longer, and you have the smallest buyer pool. This is why co-ops command the lowest price in San Francisco. Let me break down the pros and cons of each property type in San Francisco. So, condos, the pros is easiest financing with conventional loans, most flexibility for renting and selling, largest buyer pool, which equals highest resale value, and individual deeds. The cons, highest price for all three options, HOA fees that can be expensive, and they're less affordable for first-time home buyers. TICs, they're 10 to 20% less expensive than condos. They're a good option for those that can't afford condo prices, and they still have exclusive use of your own unit. Potential for condo conversion is possible in some TICs, but they do have difficult financing, higher down payments, strict rental restrictions, and shared ownership can be complicated. So there's a smaller buyer pool and other owners that can have input on building decisions. For co-ops, it's the lowest purchase price of 20 to 30% less. Monthly dues that include property taxes and high operating costs, but it is a close-knit community. They are the most affordable price point in San Francisco, but they also have the most difficult financing, strict rental restrictions, board approval requirements, and the smallest buyer pool out of all of them. And you have less control of your own property. So, which one is right for you? If you can afford it and want maximum flexibility, a San Francisco condo is your best bet. If you're looking for a more affordable option and plan to live in the unit yourself, a TIC might be perfect. And if you're looking for the lowest price point and want a strong community, you would love a co-op. The key is understanding these differences before you start your San Francisco home search so you can make informed decisions. Don't forget to download my free comparison chart that I've created with the link in the description below. It has all the information in an easy to reference format. If you found this helpful, please give this video a thumbs up, subscribe to the channel for more San Francisco real estate tips, and drop a comment below letting me know which property type you think is right for you. If you're ready to start your San Francisco home search, reach out to me. I'd love to help you find the perfect property, whether it's a condo, TIC, or a co-op. Thanks for watching. I'll see you in the next video.